Good evening. This is the Elliott Wave update for the S&P 500 for Sunday, October 24th, 2021. The trading on Friday was very interesting, to say the least, particularly in the S&P and in the Dow. There was a direct dichotomy to directional moves that, in fact, that the S&P did manage on Friday to go up within that first hour, to go up and make a new all-time high. It seemed to be such a determination from whomever that this market was going to go and create a new high no matter what. And the debacle that was occurring over in the NASDAQ, in fact, with the NASDAQ seemingly to have one of its arteries, an arterial sever, and was trying to figure out how to stop the bleeding, which was coming out of several places, the S&P decided, well, we're just going to go up to a new high first before we self-implode and then begin to decline, which actually in the term and in the larger picture wasn't all that much. But it was a pretty strong decline in going from 45.51 down to 45.15. So it was a good slide. Nonetheless, what does this do to our Elliott count, to the Elliott labeling, and to what we can now expect? And I have to say, not much. While it is possible to count 5 waves up and complete at Friday's 45.51 high, I would be remiss to say that's it, that's the 5 of the 5, we're not going any higher, and now we finished that B wave, we're heading down. And it just would be wrong, I think. I don't believe that there's enough evidence yet to declare this whole B wave advance complete. It may be, but now it's up to the market to tell us. There is still too many earnings reports, I would say, that are still yet to come out next week that can totally turn this market on its ear in either direction. So while I go through what could be coming out, please bear in mind, we are at a breaking point. We are possibly extremely close to just giving it all up and down we go as we form 5 waves down on the hourly chart, which would give confirmation that that B wave is over. We've now begun the C wave when we're in that first initial decline. These are all things that I'm still looking for, but now we have to allow the market to tell us what's up. Because again, we have Facebook reporting tomorrow. We have AMD reporting along with Microsoft on Tuesday. We have Amazon and Apple on Thursday. So we still have some very large tech players that were not expected to blow the doors down. They were to blow the doors out. You blow the doors down, which means it's like that's going in the opposite direction. So this rally door is slammed shut and everybody starts tumbling lower. That you can see from the buying that's taken place within this entire run, that the intent was not that somebody was going to report a miserable earnings report. In fact, really up to this point, they've all been glowing in terms of revenue, but dimmed considerably due to forward guidance. So if that continues to play out, well, then yeah, I would say that the market's going to be very, very hesitant to take things higher, only to get slammed back down. Now, having said that, we cannot discount the possibility or the probability. So again, they continue to hold equal weight and equal probability weighting to go up and again make new highs above 45.51. And if that's the case, then we've got 45.60 still in the picture. Then we have 45.92 still in the picture. Then we have 4600 to 4617, 18 still in the picture. 46.42 still in the picture. And the reason is because the B wave could still just whip around. Maybe this, I can count 5, maybe it's just one of this minute 5. I don't know. Market needs to tell us. Thus far, this little downslide is basically just maybe an A, B, and now we're going to drop in a C wave, or 1, 2, and now we're going to drop in the third. There's still those possibilities. But as you can see, they brought it down a little bit, and now they're stepping back in and they're beginning to buy it up again. So we're really down $4, $4.50 as we open Globex. Now, we still have a lot to get through. And so the market may just remain very much sideways, nothing going on until the US opens tomorrow morning. Now, how do we want to play this? We have to continue to really view this as a work in progress, view this as equal probability, equal potential to go down as to go up. So therefore, we now have to break it down and really start trading individual bars. If you are a position trader and you're looking that you need to establish a position maybe for the balance of November or for December or January, depending on your time frame, as if you're going out, well, then yes, you might be looking at different positions, but as a day trader, I'm going to be totally open and willing to buy if that is what the market is telling me its intent is. I don't intend to go short and then sit out a huge rally or sit tight with a short position during a rally that, you know, if I'm willing to lose 1,000, why wouldn't I just get out of the position and make the 1,000? Because that's what the market will be doing if it goes up like that. So we need to stay open and trade what is in front of us. So, and they will be extremely tradable. I didn't really need to do that. Let me take it down to the 15 and go to the 5. These are very tradable markets, very tradable bars in both directions. We just have to remain open that, okay, we're going down and it just really slipped down, and whatever the reason was, the emotion, the behaviors, the human emotion changed, and it was a get me out. And that's pretty much how it started to drop. Then it stopped and it was like, okay, I'll come flying back in. If you're watching the order flow is going to tell you what's going on. You'll see the buyers move back in. You'll see whether they're aggressive or they're not aggressive. We see it via several instruments. You could have a footprint chart. You could be watching a volume profile chart. Each are going to tell you where that volume is coming in. If it's coming in on the sell side, okay, great. You can play. If it's coming in on the buy side, you can play it. And we can put in Fibonacci support and resistance to cover the moves. And as they unfold, you can put in, and let's say, for example, A, B, and looking for a C wave. You can put in, on this case, A, B, you're looking for a C wave up. And you're going to get your markers, you're going to get your support and resistance zones. So these things are very, very tradable. And now we have to, while we wait for these larger companies to report, there should be no reason why we can't go in and trade and make between $600 and $1,000 or $500 and $1,000 or even more, depending on what your own personal trade plan is and what your goals, your daily goals may or may not be. So these are my points to today. What can we expect? Well, I believe if the market really is going to tend to go up, and again, this is based on the 15-minute chart now, we need to start breaking above these moving averages. We need to get above the 50, which right now is sitting at 45.35. But then we have resistance at these points, 37, 39. These are very tall, small time frames, 42. But it really needs to break above 46 to clear that this downside move is not going to happen. So in other words, it's like this would, if we just continue to go from here, that low would be confirmed once we started breaking above these. And eventually, if we got above that, it's definitely in place. And now we've got a different pattern playing out. Right now, if you're going to take it, this is ABC complete, then 1, 2, and now we're looking for maybe another 5. Away 5 down, that maybe will come down to there. If it comes down to there, what does that portend? That possibly this is a 1 and a 2. So your working account, and then as each one plays out, you're now counting out your possibilities going forward. So again, this is what I'm doing now. So if this is going to be just the first leg, and this is the second, and so it's wave 1 down, wave 2 up, wave A down, wave B up, and now we're in the C wave. There's different combinations, but each one would suggest we're going to put in a 5 wave down. If this is 1, 2, then we're in the wave 3 down. If this is A, B, we're in the C wave down. So whatever, you can then look for what the market is telling you. And you can figure out your expectations. You can start to see if it breaks above here, well, then it's going to be, we got to look at something different, etc. So really what I'm talking about right now is just how you would use Elliott wave and Fibonacci to help you with direction as the market gives you confirmation. Now, because you can wrap your parameters around whatever's happening. Moving averages are vital during this process. If we come back down and break back below the 15-minute at 45.28, the 15-minute 200, well, then I would suspect we're going to really start to head back lower again. We stand a pretty good shot at breaking below 45.15, which was Friday's lows. Now, if I go back out to my hourly chart, how does this all fit in? Well, we've got the 50 down at 45.28, and that's where we're sitting on right now. It came down on this little opening we had this afternoon and zipped right back up. And now we're remaining above and sitting up towards the highs. Now, if it comes back down and it breaks below that 50, now we've got another built-in stronger probability of potential for it to continue lower and break 45.15. All right, that's using the moving averages. We have already can put on Fibonacci that as an extension that would give us more points for this market as it was coming off. I'll do it right now, just as we're showing these examples, because we can't say with certainty that the market is going to go one way or the other. Obviously, it's telling us that already. Otherwise, it'd be going there. So more information is needed. We know we have larger companies reporting earnings all week, all next week. We're going to get bucket loads of earnings reports and guidance. So here's the deal. We need to play it every single day and just be able to trade it no matter what it does. If it goes up, great, no problem, let's play. Goes down, great, no problem, let's play. So you can build your intraday picture. You can use Fibonacci. You can use the moving averages. Moving averages are very important. Again, I'm just going to say you want to learn these and how they affect and what comes into play when they start to break. On my trading screens for my intraday trading, I also have point of control, value area high, value area low. These are all also important levels during the day. So what can we expect for tomorrow? I think both. Right now, the market could, excuse me, sit in a box, create this inside pattern or inside box into what it did on Friday. And if it does that, it's just has not received enough information to move it above or below the box. But we can trade the box and you can put parameters around that as well. So again, for the market to put its intent that it's going to continue higher and it's based on that they believe Facebook's going to be okay, AMD, Microsoft, Amazon, Apple, all going to be okay. We're all going to live through this. So it depends on what happens. Because Friday also, let me just emphasize, Friday was also an expiration. So maybe they come back in tomorrow and they really went home too short and now they can see whatever and they start buying. All things are possible. If the buy side kicks in, it needs to break about 45.37. That'd be first stop. Then it has to break about 45, 46 actually. That would be the second level. Now you're going back up to the highs. And if it can break above 51, which is also going to present resistance, you're going to have resistance of 45.60. These are all going to be levels with the uncertainty that sits in the market. If it got up there, I believe it would be rejected just like this one was. We're in this place where we now, and the market needs to determine where's your comfort zone, where you're going to curl up with your security blanket. And it's going to be called the point of control. That point of control can shift, but that's where the market buyers and sellers will meet and trade comfortably. They're willing to buy it, they're willing to sell it. That'll be the area. And that'll be the area with the most volume. That can shift as buyers and sellers come in and move things around. You know, if they meet up and they can't fill orders there, then you're going to get a push in one direction or the other. Now, if the market continues to go lower, what we have now just set up on a Fibonacci basis is looking at extensions for that downside move. First step would have to break below 23, 20, 17, and then that low at 15 to give stronger confirmation we are going to head lower. But then we have support at 10.09 to 10 around that level, and then 4,500, and then 4,595 with outside potential that we could get back down to 44.87-ish. Now that type of a move is going to break the low at 45.10, which is where wave 4 is. Should that occur, it's going to give greater support to 45.51, having completed that B wave. And now we would be dropping in the C wave. So the larger count is not changing. Let me emphasize that as well. The larger count right now remains in place. What we're just determining as to whether it's B wave over or does the B wave still have more to go. It's still a B wave. It's still a bunch of junk. It's still garbagey. It's still sketchy. And that's actually what the market is having to experience right now. Are these earnings really going to be as good as what they're feeling? Is the Fed going to start reacting and start tapering? What are bonds doing? What are these different markets really telling you? Et cetera, et cetera. So we're in this uncertain time. Plus, we're moving into the holidays. We're moving into, the holiday season. What do we purchase? What do we buy? Then we're sitting on top of year end. Plus. There's a lot going on. And the market can ignore it and focus on next week's earnings and put a positive spin on that and bring the buyers back in, or more caution. Be ready for either side. Downside, we got it. We got levels. We can build a picture. Should this break, it's going to have greater support that the B wave's over, and we're going to probably start heading down at least through the end of next week. What November brings is something different. So upside, we've got our points where it has to break. Where it's going to find that resistance and what it needs to get above. Like I just said, it needs to get above 37, 46, 51, and then probably get stuck at 45.60. If it's got enough gas, maybe after the earnings report, then you've got your next levels up here. Again, nothing really up here to go left to on your chart to find a resistance or support level. We're in uncharted waters yet again, once we get above there. So if it does, that's the next level. As it starts to break, there's nothing else in between. You may find some points, if I run different Fibonacci and sequences and put them in different places, you can find resistance all the way up. But as far as just a straight shot in terms of that B wave continuing, bingo, here's your levels. Okay, I'm going to leave it there. And our next update will be Monday the 25th.